Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I'm a company valuation expert in St. Louis, Missouri. During this episode, we'll discuss employee stock ownership plans or ESOP plans as an alternative to selling your business with Melissa Beezhack. She's an ESOP valuation expert in Pittsburgh, Pennsylvania. What is an ESOP trustee? That trustee is there to protect the employees through this negotiation of the purchase price in some aspect. But then you're saying that that trustee could be different for the transaction as it is for the ongoing trustee. Let's talk a little bit more about that. I know enough about ESOPs, but I think this is a good nuance that you get somebody different for the transaction that you do for ongoing. How does that work?
Yeah. Well, essentially, you definitely should have an outside independent trustee for a transaction. So in the case, we've had clients that sell that initial 30, their corporations, they sell that initial 30%, and then they sell in successive tranches until the ESOP owns 100% of the company. And, for each transaction, they brought in an outside independent trustee to preside over the transaction to ensure that the ESOP, and in particular the ESOP participants, the employees, are getting a good deal, and ensuring that that deal transpires under the guise of fair market value. Now, we have a lot of clients. My largest client has 1,100 employees, 1,100 participants, and this company is extremely successful. They have paid off their debt years ago. They're an S corporation, and all of that cash flow stays in the company for growth, for repurchase obligation, and when the employees see just how tremendous their efforts are in terms of translating to value, it's really a neat thing to see how the company value grows beyond the exiting shareholder departing from the company. But in my larger ESOPs, those trustees independently stay on. So the people that are working internal to the company can stay and definitely work on the business itself, rather than having to be encumbered with the trustee responsibilities. But I have a ton of ESOPs that they have internal ESOP committees that after the trustee, or after the transaction is done, the trustee committee then presides over all of the fiduciary aspects of the ESOP. They're making sure that the ESOP is functioning, that the annual valuation is done in compliance with the fair market value standard, and presiding over transactions. So you can have it both ways, depending on what the tolerance is for the people inside of the company, understanding that you are a fiduciary. You can pay, you can buy insurance for that, but you need to take that your role as a fiduciary very, very seriously. And typically all of the ESOP trustees that I work with, both internally and externally, the independent trustees do such a great job in preserving and really looking out for the employees.
Yeah, and that's when we talk about the fiduciary responsibility, I think that becomes very important.